Morning, good afternoon, good evening. What's going on, family? Watagwan. What are y'all up to?
Morning.
Well, you gotta love when the plan comes together. How much of this wall do you think we chopped through? Wake up, are we there yet? I'm sleeping on a job. My background's gonna be rather noisy for a second. I got some people over there about to leave. Yeah, I know. Open market didn't really show it. You want to go to CoinGlass? Turn that shit down, y'all. Just hooligans. So this is the hourly chart, right? Between us and 754. Oh, maybe we did. Did we just? Hold on. I don't understand why the chart looks like that. Let me go to the 1 minute. Okay, yeah. So those are basically the walls we have above us. Actually, it's come down a little bit. I don't think it's more like 5.5, 6 now. But if you want to add his big brother here on top of it, then it looks like we've got people lining up, right, to take advantage of this exit. Head and shoulders invalidation is at 654. Right, that's what cancels our major sort of bear structure here. Just remember that this whole thing has just been a massive range. The only reason this is even a head and shoulders is because we had a deviation and 2 rejections on either side off the top of the range. Literally, that's the only reason that head and shoulders even exists. Yeah, midweek reversal between today and tomorrow. So we're on midweek reversal watch. If we take a look at I was doing it earlier, but I don't know if you guys are watching. If we take a look at our squiggles, from the other day, right? Yellow path was my base case, right? Which is coming out of this weekend trap, putting in a low, and then putting in a high up to, what did I have that? I had it at 657. And we're sitting what, at about 65 now. The end of that wall is 654. And then that's where I'd be looking for a top, right? Lower high. Let's see. The same ones that were there. The tops don't change for me, right? Either a double top or a triple top off of local highs is what I'd be looking for if that breaks. Anywhere between relief rally, base case, and local high. I still don't think 70's in the cards. I know if you've been watching YouTube today, you're hearing completely the opposite from everybody and their mother. Maybe they're right. Maybe this is the time where I'm wrong, but I gotta stick to my guns. And there's about 7,000 Bitcoin that agrees with me, at least right now. If you listen to YouTube, yeah, if you listen to YouTube, the bear market's done, and you're stupid for not being all in right now. Then again, please understand that that comes from people who are all in right now. This annoying ass wedge. Can we just invalidate this pattern? Right? Like, just break it to where it's not a wedge. Like, that's all I ask. Like, just get us out of this thing. Yeah, I watched. That was a hard watch, man. It was a difficult watch, but I did see that. What was interesting when I saw it, because enough people were talking about it in chat, so I was like, "Oh, let me go take a look at what dude's talking about." The interesting part is when I saw it, the first thing I thought was, I don't even think I have to say anything to the group. Like they've learned enough to watch this on their own and see the holes in it. Give me a second. Let me close this door because they are not toning down over there. That's all right, bro. Everybody gets stuff wrong. It's really not about if you get it right or wrong. It's about how quick are you to pivot once you realize you've made the wrong decision. That's what's going to make you more money in this game than accuracy, really. The discernment to know when things are going against what your TA was. The problem is if you're following other people's TA constantly, then it's hard to have that discernment because you don't understand it fully. That's why I think people that just give targets do a disservice to their community. Nice. You know what? Let's dig in here a little bit and start wrapping our heads around price action. We are once again at that retest. Top of the range. I mean, it's a little bit like SpaceX earnings, right? Like they did really well until you dig in and realize that it was really Starlink that killed it. It sort of made up for the discrepancy of XAI. And their expenditure is crazy. The amount of money that they're spending on tokens is nuts. Yeah, I'm trying to see how much we can chew through it. I'm slowly exiting position, but I'm being a little greedy. This blue line right here is the top of our value area. So if we can grab these liquidations, then I'll probably exit my position fully at this point. The biggest manipulation we could have right now, the most effective manipulation we could have right now is if those orders were just removed. If you just pull that 7K above us, this thing could continue to go for a bit, like that triple top that we've been looking at. Let's go look at the macro for a second so we don't get lost in the weeds. Super fast, have we bottomed yet? Q3 swing, Q3 swing, Q3 swing. Nope. If we've bottomed, that means that market maker and exchanges are going to let everybody that's 100x long underneath this price point eat. This isn't even a Bitcoin bottom. And you can see that that's not the way things work, right? You consolidate for this long, the sweep takes out the consolidation, takes out the leverage, and then price continues. So should we have caught up here? Yeah, of course. Why wouldn't we? There's tons of support here. There, right there, bottom of the wick, which is my base case. The SR that broke. Right? The tops of your ranges. Your type 2. Right? There's no secret why we're here. Like, there's no secret why we've held and why we've taken this long. Like, that does not mean that we're at a bottom. It just means that we run into the largest consolidation zone that Bitcoin's ever had at its tops. And I see this one a lot. Go to log. Right? Up against the downtrend. Look, we're so close. If this breaks, this is what Face was saying yesterday. If this breaks, off into the races. Whenever you break the downtrend during the Bitcoin bear market, That's the end of the bear market, blah, blah, blah. Really? Is it? Because this was our original bear market downtrend. And we broke it and we had that little relief rally, but it didn't work there, right? So why is it supposed to work here just because it looks pretty? Right? We don't end bear markets because a trend line broke. I'm gonna do a have we bottomed video. I guess I should do it tonight, bro. With all the shit that's going on, I should probably do it tonight. But we'll go over the entire rule set. Right. More importantly, our Ichimoku. And again, this is just a fast run through. You guys that have been here for a while, you know this already. Ichimoku baseline and the Ichimoku cloud on the 2-week, right? When your Ichimoku baseline breaks the cloud on your 2-week, you're 2 weeks from the bottom. Right? When that baseline breaks out of that cloud, it tends to mark the bottom of the macro. (2018) baseline breaks the cloud, right? Momentum flips, 2-week candle to the bottom. Ichimoku baseline breaks the cloud. To where we're at. So if you want to play it forward, just my opinion, you can take this with a grain of salt. Rejects, drops down to mid 50s. That drop down to mid 50 brings our baseline down. We consolidate before the final sweep. Consolidate. The final sweep is what breaks that baseline. These are our lows. Off and to the right. Whatever it is that you believe is happening, whether you believe we've bottomed or whether you believe we haven't, the only thing that I ask is that you build bulletproof conviction in what you think. Go absorb as much information as you can, study as hard as you can, do all the technical analysis you can, compare and contrast different ideas, and just make sure that whatever you think, whatever you're playing on, that you have conviction, your conviction, right? Not just, I trust this guy, he said it, so. Because if you think it's hard now, wait till the next drop. When we hit that next drop to mid 50s, in my opinion, the have we bottom guys are going to be screaming from the top of the rooftops, bro. And if you don't have conviction, there's no way in hell that you're not going to. Right? Me personally, I'm starting my DCAs on the next drop, right? Not because I think it's the bottom, but because I know that we can't tell the future. Right. So at that point, I'm comfortable starting to load up at low 50s, right? Leaving that bag to buy the sweep with. Exactly why. Nobody's going to care if you pick up 38 or 48 or 58. Right? The W is making it through the bear market with enough money to buy the dip. My base case is below 54. My base case is 48. Low 50s is my low 50s is my bull case. 48 to 46 is my base case. 38 to 40 is my bear case. That's a good question. How long in the future are we looking? I think that's everybody's main question right now, solar ETH. You know? They've got two different jobs. You know, during the last bull market, our question was, who will Wall Street pick? Right? If Wall Street's going to tokenize all stocks, who are they going to pick? Are they going to pick Sol or are they going to pick ETH? I think we have the answer now, right? They've picked both. Sol is going to be used for high throughput, right? Algorithmic transactions. And ETH is going to be picked as the settlement layer, right? ETH is basically what people need to look at ETH as, what it really is a ledger, right? Like, you know how your business has a ledger? Well, this is an immutable ledger that all businesses can use, right? One unified immutable ledger. And it comes with the safety and security of the uptime that it's had. The only problem is speed. The problem isn't money. A lot of people think that the problem with ETH is the gas fees. Guys, nobody cares. Only people that care about gas fees on Ethereum are people that are buying $10 worth of a meme coin and trying to turn it into $15. And they don't want to pay $20 in gas fees. If I've got $3 billion under management and my manager calls me and says, hey, we're going to buy a bunch of ETH and sit it in staking. You're going to make this much. You should expect this ROI by the end of the 3 years. Oh, yeah, by the way, it's going to cost about $200 in gas fees. I would hang up on them. Like, why are you bothering me about $200 in gas fees? We're talking about billions of dollars in transactions here. Right? To people with that size money that care about the security, and the security comes in when you're talking about large bags of cash, right? If I had $1 billion right now that I needed to send around the world, that I needed to send from one place to another, I would not send it through Solana. I don't care how fast it is, right? I would send it through the security of Ethereum and pay a higher gas fee. So I don't think one's going to win over the other. I think they both have a job, and they're starting to be defined right now. Right? I don't think Sol steps on Ethereum's toes. I don't think Ethereum steps on Sol's toes. At least when it comes to tokenized assets, right? When it comes to RWA, memes, Sol's always going to have the upper hand on memes because it's literally the only place, like I said, that you can take $10 and turn it into $15 and not get wrecked on fees. So that's always going to have a place. But yeah, we need to think a little bit bigger when it comes to legacy. I'll be honest with you, even if we just stick to institutional narrative, we're kind of spoiled for choices. You know, Sol, in my opinion, is going to do well. ETH is going to do well. All of the stablecoin rails, Bitcoin, Ethereum, Solana, Tron, going to do well. CC, XLM, maybe even Poly. Right? And we haven't even sort of moved into speculation at all. Right? These are just companies that are going to have revenue from transaction fees, from stablecoin rails. And these are companies that institutions already have the green light to accumulate if needed from their boards. So I think I'd rather focus on that in the beginning than hope that BlackRock is gonna buy my altcoin bag or something. beer o'clock. No, I'm just playing this Coke Zero. Nope. We're on the 1 minute, so that doesn't. We're literally still in that. We just reacted off the top of that wedge again. Like literally. It's so dumb, bro. So dumb. Y'all might not want to hear this, but I'll be completely honest with you. The absolute worst thing that could happen here, or the most annoying thing, I guess I should say, you already see it. That would suck. It's like another 2 days. Luckily, we have midweek reversal coming up. So unless market maker loses control, I don't think we have to worry about that. But that would suck. Sometimes you got to name the devil to shame him, bro. Right? Few things we know for sure. There's a gang of Bitcoin above, and we don't have the volume to absorb it. And market maker targets are all underneath us at this point. Right? We're just quantifying what we know for sure right now. So we know that there is an insurmountable amount of Bitcoin, at least with the current volume, right? Which means you would need to see massive volume spikes. And we know that all of market makers' targets are to the downside currently, and that there is enough liquidity to grab those targets with very little cost to them. So what comes first? The volume or the mean reversion? Right, that's basically where we're at right now. The reason that I say annoying too, because I mean, we all like money, right? Nobody's gonna cry if we make more money. But I don't know about y'all. I don't want to spend another 4 days to get that 1%. Like, I'm good with not getting that 1% if it means that I don't have to sit here and stare at a boring ass chart. That's just me. I'm willing to pay that 1% for a little action. You see some money coming in, Isnar, that we don't see, or are you just trying to manifest it? Either way, I respect it. Manifestation is strong. Not me. Now, the best case scenario for it is to come down, grab these liquidations, and grab some money, right? Like we need more traders, brothers. If you want to just simply put it, we need more traders. And if we can't find them up here, then we have to find them down here. That's all. At some point, it just comes down to liquidity math, right? Like we know the math. There's 6,000 Bitcoin sitting there, right? We also know what the current volume is, right? So if the current volume stays at this level, then it's easy to do the math, right? Stare at the tape for a little while. Make a running count of like the next 5 minutes worth of price action, right? And then do the math. How long would we have to stay at this level of buy pressure? And you can't count the negatives, you can only count the greens, right? How long do we stay at this level of price action until we can absorb that wall? That's it. That's all it comes down to. Right? If you start seeing 50 Bitcoin, 50 Bitcoin, 60 Bitcoin bot, cool, then we'll start doing the math. Right? But if it stays like this, then we're not getting through that wall. At least not right now. It's just simple supply and demand at this point. Now, at any time, like I said, at any time, somebody with way more money than us can come in and slap that green button, take all your TA and shit on it, right? That's just the risk that we run as analysts.
But why would somebody do that right now?
Yeah, it doesn't make a lot of sense, but
Just things we don't know.
big money isn't always the smartest either, and yeah, there's always that information asymmetry where they could know something we don't.
Probability wise, with information that we do have, it's overwhelmingly not in the favor of going up. I remember like 4 or 5 years ago, the charts look so bearish, like so bearish. I mean, there was a giant head and shoulders, liquidity, everything. And I was in that state of mind where, no, they're trying to trick us. There's no way it can be this obvious. Everybody's saying it's going to go down.
Yeah,
It crashed so hard. And I was so confident, I just kept putting money in. That's
yeah.
of it. But
That
it's the
that
lesson that
part,
you learn.
that part, right? That the unknown that can always happen at any time, is something to be careful of, right? It's something that you want to sort of hedge against if you can, but you can't make your main trades on that. You know what I mean? Like you can't make your main decision on a trade on a what if, because it's not the most probable, you know.
Yeah,
But
the
it is
counter
worth paying
trade
attention
helps
to
us.
it. You have to pay attention to it, right? But yeah.
Well, people get in the habit of counter trading
Yeah, yeah, yeah.
because it works, but it works until it doesn't work, and just like everything else.
And you have to be careful who you're counter trading, because if you're sitting in respectfully, if you're sitting in crypto banter live stream and you're counter trading the current sentiment in that live stream, probably gonna do all right, you know? But if you're
That's
in a
true.
room with people that actually know how to do TA and know what they're doing, and then you start counter trading that sentiment because the majority is always wrong. Well, yeah, the public, right? The majority of the public is always wrong. But that doesn't mean that you can't find yourself in rooms where people actually have it figured out, right? And then if you get to the habit of you just counter trade everything you hear, then you can get yourself into some trouble. Yeah. Yeah, I think a lot of people did, Daniel. BitBoy, crypto, and banter, and all of those are the channels that people find when they first come in. Gloomy, that's funny as hell.
Did you see in You have to scroll up quite a bit, but a turtle wandered into his yard. Well, it's like a giant tortoise or pretty big. I don't know if it's a turtle or a tortoise, but he's babysitting now because it escaped from his neighbors, dug under his fence, and is chilling in his yard.
That's funny. Yeah, I do agree on that, Zen. Bears are the one group of people that have the power to keep this going right now. If they start slapping shorts here irresponsibly. Remember, each one of these shorts has to cover. Right? When that line gets clicked, they've got to cover, they've got to buy Bitcoin to cover their position. So if you can get $7,000 worth of or 7,000 Bitcoin worth of liquidations inside of a 7,000 Bitcoin sell wall, then all you have to do is trigger the liquidations. Makes sense. Bears are usually bears' biggest enemy. Bulls are usually bulls' biggest enemy at the end of the day, or at least leverage bulls and leverage bears. Oh yeah, if anybody, I mean, at this point, if you're, this is a gift to anybody who wants to get rid of Bitcoin at these levels. That will. It's also a gift for anybody who wants to buy a massive amount of Bitcoin without pushing price. The best way that I've found to counter any manipulation from Trump is to not listen to the shit he says. You see, I don't just run to throw on the, you know, whenever Trump is talking somewhere. We used to watch every Trump speech in here when he first got elected. We were glued to that shit. After tariffs, I'm good, bro. I'm good. In my opinion, yeah, Clap. Westbrook. You guys need to make those T-shirts. It's like a hoodie, a Ukraine hoodie waiting to happen. Apparently, one of our Cypher daughters has a birthday today. Big shout out to Nina on her special day. Happy birthday. And tell your pops to go buy you something nice. Happy birthday.
Shazam!
Shazam. Yeah, Eric, I've had it made for months, bro, and I just haven't listed it. I've been so swamped with Cypher School and all this stuff that the merch stores kind of fallen to the wayside. More life, Nina, more life. Now you got to go bug your pops to get you something shiny. Yeah, we're trying to flip that. We're just trying to flip our trend, right? So we lose the trend line, we start putting in our first lower highs and lower lows, and then we flip. Yep. SpaceX is unlocking 20% shares tomorrow. In my opinion, like I've been telling y'all, that's the first bit that goes into the we need to buy Tesla fund. We warned about that move yesterday, right? We said that earnings looked good, but when you really dug into the earnings, it wasn't SpaceX, right? It was Starlink that came through with those earnings that basically saved. So if you look at price action since then, big gap down. And yes, there's shares being released tomorrow. So I think people took their exit. Right. Me, there's nothing I can do about it. My SpaceX shares are stuck until we get to this line. And I bought them at 135. So in my opinion, that's just gonna be a DCA, right? I'm not getting out of that before I buy lower. So I'll just snatch my average down. But we're in my DCA in my buy zone. So I want to see a nice dip through this, and then I will start at that point doing a more structured DCA. Yeah, it's gonna be a little rough tomorrow, I think. When they announce that acquisition officially, there's gonna be a race for Tesla. There'll be a race for SpaceX too, but I think Tesla is also gonna catch a bid. People are gonna want to get their hands on some pre-acquisition Tesla. All right, we've knocked 3 of market makers' targets off the list. Next, 200 EMA. Uh-oh. Ghost about to have an empty crib. Turn up time. I'm kidding, Mrs. Ghost. He's going to be hating life, bro. He's going to be staring at the walls, just counting the minutes till you get back. Give it like 24 hours, bro. You're going to be looking sick. ETH is still in pattern. It has to hold the neckline on the way down. If Bitcoin takes a trip, then the chances of that are pretty small. But it's lined up to hit that resistance at 19.7. It's going to need some help from Bitcoin for that, though. If Bitcoin goes to take the rest of that sell order above, then they'll make a run for that. But right now you're on type 3s, right? Type 1 entry, type 2 entry, type 3 was your breakout. Type 4 is waiting to see if there's any volume when we get back to that range. So basically I'd be watching 1900 to see if orders step in at that point. Really comes down to biddy though. I hate that I have to say that after every single alt TA, but it's true. See, Ghost is already bored. Look at him. He's looking for ideas. What are you going to do while your wife is... If you think of something fun, let me know. The crypto's in our hearts. I was just trying to keep it from being too busy. That's the worst thing you could do when your girl is gone and your wife is gone. Sit there and get drunk in the house alone. It's gonna be fun for like 20 minutes. An hour in, you're gonna be crying into your wedding album. Look at how beautiful she looked. Yup. Just bugging the shit out of your girl while she's trying to chill. Market maker's not picking up my calls anymore, bro. Last 3 calls have gone right to voicemail. Yeah, last night I thought it was a goner too. I think you rather deal with the mods than have me step in. Gosh. Everything's so chill when you're not here. I don't think you realize it. Like the second you get here, all of a sudden there's issues. All right, fine. 15-second. Hold my arm. Hell yeah, that's crazy. She's gonna be all right. By the time she's old enough to drive, she might just get her own car. Exactly. That's what I'm talking about. Imagine how proud you'd be as a parent. Your kid just reaches driving age and they buy you a car. His daughter. It's her birthday today. Bro, these kids can trade. You just don't realize it because you're not paying attention to their video games and shit. But trust me, they're sitting there turning 10 Robux into 20 Robux. They're buying shit, they're selling it, they're doing all of the same things we do naturally, but it's in game. You know what I mean? It's just an in game economy. it's nothing to shift that. What does this look like? All right. I'll make it easier. The market is a fractal. I don't ask for my brain to work like this, by the way. It's kind of annoying sometimes. But our 1 minute is a fractal of our weekly right now. You see it? Scotty. Yeah, I got you, bro. So we got our ATH on ES, right? We were expecting it in July, or I was expecting it in July, I should say. And we ended up getting it first week of August. Cool. Right? These green and red lines are global liquidity, right? This is our GLI on the daily. So we hit that uptick on global liquidity as expected. I think that this is a ATH. Well, like I said before, this even broke out when we're still down here, right? This ATH ends in a swing fail pattern. I can't tell you if we've topped or not yet. Right? That's going to depend on the news that comes in over the next couple days. But I can tell you that if we haven't made that high by the 18th of August, I think that's all we get. Right? At this point, if we go to the daily and look at GLI, right? This is sort of what it looks like here. Right, so there's a couple of days of uptick left, and then we go into some chop. This is where I think we go into gold. Remember, just because global liquidity goes up doesn't mean that it keeps going into the same asset. What we're looking for is rotation. Right, so I'm expecting our top and legacy to be in this range. So this rotation, in my opinion, goes into gold. Right. So I'm looking for the first real noticeable sustained uptick in gold to come in somewhere around the 28th. If we look at NQ, we still haven't made that all-time high, and we might not. Right. From the beginning, I said that I do have faith that ES makes an all-time high, but I think NASDAQ could make a lower high or a double top. So let me fix these two because, hold on. Oh, they are right. Okay. I just didn't put the green one back here. Right. So all we're doing is we're mapping the expansion and contraction of global liquidity, right? And trying to decide what assets that's going into. Right now, it's been pretty obvious, right? This is our correlation to global liquidity on a 100-day, on a 84-day offset right now. 85% correlated to current price action, 74 for the last week, 50 for the last month, 95% correlated for the last year. Right? That means that ES and NASDAQ have been running neck to neck with global liquidity for the last year. If we go look at ES's correlations, 96% for the last year. Right? This is the tightest correlations you're going to find on anything, you know. Like, this is ridiculous level. The reason it's ridiculous is because you're not talking about it being correlated to what price is doing right now. You're talking about the correlation with 100-day head start or an 84-day head start in the when you're talking about legacy. That means for the last year, NASDAQ has followed what global liquidity has done 95% of the time with a 100-day head start or with an 84-day head start. Right? This price action right here happened 84 days ago. Today's price action. Today's price action on GLI is here. This is real time what's happening. The edge that we have, right? The predictive edge that we get to use if there's tight correlations comes from the velocity of money. How long does it take for all of these M2s and all of these central banks when they print for that money to get into your pocket where you can actually spend it on buying a Bitcoin or buying a share? Right? There's a delay there. There's a lag. That lag is our offset. That offset gives us our edge. That offset got us the 74 buy-ins at Bitcoin. That offset also got me out on the 9th, 1 day before 1010, 3 days after the top. No, it's in a way, yes, but it's a GLI that I put together. It's a global liquidity index. So it doesn't just have it doesn't just have US M2. Right? I've got US M2, Eurozone, China, Japan, North America, Europe, Asia, Latin America, Middle East, Africa. I mean, African M2 is only holding 0.3 trillion and it's still in there. Right? Then we have smaller central banks that's not included in most M2 indicators. Right? We've also got Bank of Japan and we've got more definition into our central bank, right? Meaning you can turn all of this off. And now you're just looking at us. Right? It's the Fed balance sheet, the Treasurer General account, and the reverse repo. Which is going to be good for different types of analysis. Right? Or you can just have the full board on. It was one of those things that didn't exist, so I had to build it. If I can finally figure out what TradingView's problem is with me listing indicators, then I'd be able to get them out to you guys. Easy way. Worst case scenario, y'all, if it ends up that I just for whatever reason they don't want me posting indicators or I'm not allowed to whatever, I can't figure out what it is. But if we can't do it through TradingView, then I'll just post the codes in the chat, in the YouTube, I mean in the Discord. Right. And then you guys can just go on a script and do it yourself. I just want it to be more clean and organized. Right? It'd be better if you can just literally search it and download it. I want to be able to put the little lock on it. You know what I mean? So like if you're in the Discord, you can get some of them. Some of them are going to be for everybody. Like some of them are going to be free for everybody. But I mean, at this point, we have an entire suite of like 7 indicators. Yeah, the first one they removed because I was shilling the YouTube. I was like, if you'd like to learn more, you know, come to our live streams, blah, blah, blah. And then AI said that that's probably why. But then I rewrote the description, didn't mention the YouTube, just plain boring ass description. They've got such a monopoly on it right now, Yuski. Like, for me to switch, and with the issue, I have issues with TradingView, but for me to switch TradingView to another charting platform, they would have to, I mean, it would have to be one hell of a platform. Yeah, if you downloaded it and it's on your stuff, it'll still be there. Yeah. Yeah. If you got to download it before they got rid of it and you favorited it and all that, then it'll still be there. But you have to favorite it because if for some reason it comes off of your page, then you won't be able to get it. Nah, I want whatever platform takes over for TradingView. I need that to be made by like coders. Like, I don't want that vibe coded. I want people to suffer and toil and get bloody knuckles coding this thing. Yeah, yeah. I think the problem is you get lazy, right? When you know there's no competition. When you know there's no competition, you get lazy. Which is dumb. When there's no competition, that's when you got to step on the gas. Kidding me? That's when you got to increase that gap. Put your foot on their necks. I'm gonna tell you right now, if TradingView brings in level 2 data in a real way with liquidity heat maps and everything else is gonna be cooked. That's the only reason I leave TradingView to go chart anywhere else is if I need to get a little bit more granular information. Take a little look at the battlefield real quick. 25%, 30% bearish delta right now. Long short ratios at 1.1. Battlefield is calm. Nah, I haven't heard of Market Monkey. I think women are better traders because they're less emotional. That's why I think it's funny as hell when guys call girls emotional. I'm like, have you ever traded? Because a guy will lose a trade and it'll be a hit to his masculinity. Right? Like less of a man type shit. Girls don't, in my opinion, go through that. Unless they're the sole provider. Right? It's really a sole provider thing. But society has a lot to do with it, right? Like society expects you to protect and provide as they should. Right? But so much of like male identity is wrapped up on your ability to provide for your family that losses feel like a hit to that. Take it a little bit different. It's real shit. I've seen it in real time. We're just talking about the difference between men and women when it comes to trading or when it comes to taking losses more than anything. We tend to act like a bunch of babies when we lose. Women, for the most part, tend to try to quantify why they lost and just not do it again. It has to do with the relationship to money. That's all it is, really. Like women tend to look at money as a tool to get things they need, and men tend to look at money as an identity marker or a status marker. Super
Thank you, Mr.
chat.
Dbloc. From Nina.
I appreciate
That
you,
head
Nina.
emoji, a pink heart
Lots of
emoji,
love. Enjoy your
orange
day.
heart emoji.
Shazam!
What's going on, Peace? Well, printing might be a bit of an exaggeration, but we haven't fallen asleep yet, so that's a good thing. The price action is just so slow right now.
What's up?
Yo,
Pretty interesting morning.
yeah? On what? Give me something to be excited about because we're still inside this damn wedge on Bitcoin. SpaceX had an interesting morning for sure.
Tomorrow's your day.
Oh shit! What am I
They're
forgetting?
They're gonna unlock your shares.
No, it's not tomorrow.
That's not what I heard.
It is. How many days away are you now?
I thought I heard. I'm damn sure I heard something's unlocking tomorrow.
6 days. No, they're selling more shares tomorrow. They're unlocking shares to sell. They're making shares available on market. But that's not my thing is different. Still have 6 days.
You think that'll make it dump?
Yeah. More than likely.
'Cause
I
I'm
had a
thinking about
small hope that we'd be able to get up to my 135 by that day, but then when I saw the schedule for the release, I was like, oh, yeah. That 135 is just going to end up being a small DCA, basically. You know what I mean?
Yeah, I was thinking like 90.
We're already in we're technically already in my DCA zone. My DCA is from like 109 to like 95, but my buy zone is 90 to 70.
Yeah, that's where I want to get in.
Be nice.
I'm watching.
Mm-hmm.
Gold went.
So's baby girl. She's watching too. She's like, you said you weren't gonna buy until, and she's like keeping me honest right now.
I guess SpaceX said they're only going to buy from the video, so AMD went down today.
Yeah, it took a little bit of hit there. I posted last night, in general. If anybody saw that post in general, I'll show you. I was like, where have we heard this before? When the video was talking about putting that AI compute in those data centers in space. And then when you click on it, Elon reposted. Elon reposted that post. I'm telling you, the plan is there.
Well, you know, the Bitcoin, his bottom guys are back out again.
Where is
Didn't I hear that story like a couple weeks ago, like last month or something?
that? What? I'm sorry.
The Bitcoin has bottomed out. Guys are back.
Oh yeah, all over the place. Today was bad. Today and yesterday's been crazy on YouTube and Twitter.
Things all crazy, bullish now and everything.
That's good, man. You can't have a big drop unless people are bullish, right? The big drop comes from people freaking out and capitulating into red candles. You can't get that if everybody thinks it's going down.
Yeah.
So I welcome it, you know. I welcome the bullishness as long as everybody hears on their P's and Q's.
Yes, sir. Just waiting to get that chunk of money coming in at the bottom. We're close enough DCA to the bottom. My bad. I know.
The fight for this support resistance is pretty intense.
Yeah, I'm trapped down at like 63 something.
Nobody's making any headway here. Well, as you could tell, because
Market's closed. Time for some bearish news out of nowhere.
there you go, bulls. I mean, bears. Push those bulls back. Push them back.
I'm curious what it'll look like on a big dip or pump.
They push kind of hard. The next thing I'm doing is I'm going to make the territory scroll, right? Because what I want to do is have so the field is like 10,000, right? From one base to the other base, from the bull base to the bear base is 10,000. Right now, the line sort of just moves and they stay in the middle and then the numbers move. But I want to make it to where they actually push, right? When the bulls get all the way to the end, some little fireworks or something, and then it resets.
That'd be cool.
Yeah, I want to see them actually move the field. And then I can do like football, soccer filters. Then you can get creative, right? Then it doesn't have to be like war. You can make it whatever you want. I was thinking the other day that a tug of war would be interesting because that's always how I've seen the market, or like a big tug of war. That's what she calls her sample. It's funny. I remember when people used to call Pisket that sexy German lady. So many people thought Pisket was a girl. That shit was hilarious, bro. I don't know if anybody was around for Pisket times, but people used to come in just to talk to Pisket. And then they would like try to rizz him up in the chat. Like, y'all know Pisket's a man, right? And then people in the chat would be like, yo, honestly, I don't even care at this point. I got issues. A lot of people did. A lot of people thought it was a girl. I mean, he did have like that high pitched sort of voice, though. Buddy, your mic. Yeah, that's a long time ago. It's crazy when you think about it. Like 6 years now, going on 7. It might have been it. As you can imagine, that shit would probably wear you down during a bear market. He probably needed a break. We've had some funny ass characters come in and out. I find myself wondering what chemicals up to every once in a while. That girl's crazy in like the best way possible. Remember when she did that vampire facial on YouTube Live? She was just sitting there with her whole face bleeding. I'm like, bro, what are you doing? Don't you listen? If you say that name 3 times, bro, be very careful. I hear you, but just be careful. Excuse me.
What was the date for the timing on the global money flow chart for like when it was going to start downtrending?
We just looked at it earlier. It is 19th. It tops on the 13th, but then it kind of just does like a little double top, and then on the 19th it goes down.
It makes sense. Middle of the month.
Yeah. If you look at currently what's going on too, we're about where you would expect that little hitch. And we're getting close to that first little hitch. Everybody will be back, man. Your favorites will all be back during the bull.
Well, you were right. Money went into gold. Money went into all the AI stuff.
Yeah, let's see. This next rotation is going to be the important one when ES swing fails. But I'm still looking at metals pretty heavily for that.
Something did an all-time high today. What was it? The NASDAQ or something? One of them did. I don't know. I hear people talking about $72,000 Bitcoin. All that 74. is what Gareth is saying.
This is the problem, bro. The problem is when there's TA guys that are just TA guys. Right? You remember the Head and Shoulders that looked like shit that I was like, bro, what is he talking about? When I came in here that day and he had this Head and Shoulders here. Remember where I like came in and kind of lost my shit a little bit? You know, so now he's like, well, you know, Head and Shoulders, and it's okay. Now you've got, you know, a case. But the point is that we're already looking at that W. Right? All of these guys that are shooting for 74, 72, like literally all they're doing is this. Right? Same shit we've been doing this whole time. There's your 77, 76. Hold on, I'm on log. That's why. Right? There's your 74, 76, 75, whatever. And cool, I get that. Yes, that's a pattern. And yes, that's the measured move to the pattern. But that is that where it stops? Like, do we not take everything else into consideration? If ES really topped out here and comes down, do we get that? Probably not. I mean, we've seen it before, and like, how many times do we got to do it? Go back to when we were here, and you'll find the same video. Were they wrong? Like, no, that is a W pattern. This would be the measured move for it. Right? But there's more than just TA. You know, even this, where we had a really good relief rally, our best relief rally, I think, out of all of them, was down here. Beautiful. Every reason in the world to play out. Why didn't it? Right? Because of everything else, because of sentiment, because of seasonality, right? Because of fundamentals of where we are in the cycle. But then this one should. Right? It's the same thing with Crypto Face's new video. And Gareth did the same thing. Guys, look at this. Let me tell you that this is why I love TA. Let me explain to you guys why I love TA. Look, go like this. Yo, why are we just sitting here stalling? Why? Because look, and when this breaks, we're gone. All right, cool. Right? Bottom of the bear market. If this breaks, we're gone. That's Face was saying the same shit. All right. Well, if that's true, then why weren't we gone here? Right? Because this was our original downtrend. So what happened here? Right? Same shit, coming up to a downtrend, super bullish. We all know if downtrends break, it's bullish. Blah, blah. Cool, but why didn't it play out?
Yeah.
Right? And if that didn't play out, then why are we so sure that, you know, it's just too simplistic. It's not that they're wrong. It's that it's not complete. They're not looking at the cipher. They're not looking at the complete circle, right? The complete 360-degree view of it. They're just in my opinion, cherry picking what people want to hear right now for likes.
He's trying to say because that trend line slope that coming down that you were showing,
Mm-hmm.
that it's had multiple chances to break it and it keeps tapping it.
Yeah.
And
Yeah.
then he's also saying you're gonna follow gold.
Yeah, that I'm not too sure about. I mean, I love the whole digital gold thing with Bitcoin as well too. Don't get me wrong. But people that are going into gold, like people that are making the decision to that are making the decision between bonds and gold right now are not really your Bitcoin speculators. Like it's big money that's trying to get out of the way of the market coming down. Right, if real estate's coming down and equities are coming down, forget about everybody that trades crypto. Right, remember the bubbles. We've always done these bubbles, right? Like these are the amount of people that trade in the world. These are the amount of people that trade crypto in the world. Right, so let's forget about these guys for a second. This money is looking for somewhere to go. Right, this money has been sitting in legacy for 3 years, absolutely eating. Right, sitting in AI plays. Their decision is usually between gold and bonds. Right, if 30-year bond is above 5%, they tend to choose the bonds. If it's not, then they tend to choose gold. Right, and if we look at the 30-year, we're at 5.1%, but it's coming down. Right, so if people feel like they're not going to get at least 5% on the 30-year, then you'll see gold start to pick up. Right, like if we drop gold on this chart, shit. You see where that uptick in gold has come from? Right, as bonds top out, gold sort of bottomed, and then as the yield has gone down, gold is taken off. If this continues to come down, gold will continue to run. That's the better of two options, right? These are the options that most people consider safe. If you want to see the inverse, you can just invert the chart and you see what I mean. So look at it like this. This is what gold did, the big drop, right? Why? Because bonds went from 4.6 to 5.2. Right? Clear cause and effect. So if you want gold to break all-time highs, then we need bonds to come down. Thank you for coming to my TED Talk. There's brownies and matcha in the back.
That's fun. Somebody did graffiti of a whole bunch of dicks on the side of the highway on the wall.
Somebody just tried to scam me. I tried to put it up to the mic so you could hear it, but apparently somebody in Frankfurt, Germany is trying to reset my phone number.
Well, damn.
When the phone rang, the caller ID said Google, so it has to be authentic, right? You're going to have to try a little harder than that. In New York City. Birthplace of scams.
And theft.
Joke's on them. My phone's dry anyways. Have fun.
You got 30 minutes to make it for $1 beers and $5 wings. Or 10 wings.
Nah, Evo. That's outside of the realm of possibilities. Pretty comfortable saying that. The reason is that if we were, it's not that it's impossible to go to 114 from here, but if we did, the bear market would be over. Right? There would be no coming down to 42 or 38 at that point. For me, I'll be completely honest with you. If you get above 85, there's no coming back. $83, like 83.5. Yeah, that would break it at that point. Because remember, we judge our bull markets and our bear markets by the inability to break that all-time high. And so once you broke that all-time high at 124, it would automatically be disqualified on like a macro chart, you know? Is there enough money in the world for somebody to come in right now and send us to 114 in a day? Yep. There's enough money in Elon's bank account to do that. That's the risk that we run, you know, every day. Which is why I think Bitcoin adoption is important. You guys got to realize if the richest man in the world right now decides that he wants to lock down his share of Bitcoin, price is gone. Now, forget about the richest man in the world and just think if the top 100 richest people in the world decide that they don't want this train to leave without them, it's gone, you know? So we are running the risk every single day that adoption stays at the, like we get used to adoption being at the rate that it's at. But the thing about S curves is adoption goes parabolic at some point, right? At one point. Yeah, people with that much money have better things to do than play with the chart. But I mean, I don't know, bro. I was the richest man in the world and I got on Twitter and I was like on crypto Twitter and I was listening to everybody talk shit and somebody just rubbed me the wrong way. You know, maybe somebody just a little too confident. They 1000% would get sold into. Yeah, 1000%. It's like if anybody's ever played with memes, and you put too much money into a meme without checking to see what, you know, what the liquidity was, and you created a big God candle, you know exactly what would happen. People around the world would look at their screen like, excuse me, what? Sell. The fast move is typically the fake move, right? Fast moves get eaten up. So they're easy sells. But the sentiment that it would create would change the market completely, though. We wouldn't have consolidation ranges if it weren't for that fact, right? When you're in a distribution or an accumulation range, that's exactly what's happening, right? You've got a big player, group of big players. You know, the old heads used to say that when you're doing TA, you need to look at the market like if you're trading against one person. Right? Just simplify it. So when we're in that accumulation range, that one person, right, has tons of money that he's trying to buy an asset with, but doesn't want price to get away. So you've got to keep it sort of locked. Same thing with distribution. This is a perfect range to distribute from. And obviously, we're not the only ones that think that, or else there wouldn't be this many Bitcoins sitting up here. Right? So could you just market sell 7K Bitcoin? Yeah, but you're going to wreck yourself. 7K Bitcoin right now. If somebody sold 7K Bitcoin on market, I can't even see that far. If you sold 5,500 Bitcoin right now, it would drop us to 63.7 in one candle. So that would be a candle that went like this. Right? That's what 5,000 Bitcoin sold on market does right now. No, the walls are pulled up and the walls are in dark pools. They're not showing on Keo. You got to come to CoinGlass. They've got a bigger aggregator. Yeah. So, and look at how big it was before, right? And we're talking, this is solid. You're seeing there's like no, you got a little bit of spoof in here, right? But for the most part, look at that. That's like zero spoofs. Right. So these people can't sell. They're not gonna. You're just not gonna do it. Right? You're gonna sit up here and you're gonna let price come and you're gonna get rid of your coins. And then you'll see some buy walls come in underneath, right? Because they can't let price get away. So when you start consolidating against these ranges, it's exactly what's happening. Right. This was down here. 643 was the bottom of it. Right. And then somehow magically, right, we had support right underneath us at point of control that wouldn't let price drop. Right. And high volume coming in at the lows. See the spikes? So what's that a telltale of? Right, that's a telltale of somebody getting rid of their positions slowly to not drop price too much. Maybe you sell 100 million Bitcoin or $100 million here, and then you spend 50 million to keep the price from falling. And then you get another 100 million out, then you got to spend another 50. Right? Then eventually, when that big player is done selling, But how do you exit at the end? Remember, imagine the market is one person, right? So let's say you have $1 billion that you need to get rid of. Right? So you're selling it off in chunks, selling it off in chunks, selling it off in chunks. Then when you get ready for your last hit, right? By the way, when you're selling here, you're building liquidity to the top side, right? So when you don't sell, price sweeps into liquidations. Now you're sitting in these liquidations and you're sitting in this massive pool. Now you can dump off, right? Now you can sell a bigger bag at this point because these guys are forced buyers. So you're moving into a pool of liquidity that lets you sell bigger bags without getting slippage. And then once you're done dumping, and you have no reason to hold price anymore because you've already gotten rid of your bag, then price collapses. Or you get trapped in this wedge of death. Let's for shits and giggles, right? Because this wedge will make a decision at one point. It has no choice but to. The only problem is that the angle of this shit is diabolical. Hold on. Let's just extend. Extend right. I've seen crazier things happen, y'all. Just saying. And right. Again, August 8th. By August 8th, this thing is going to choose a direction one way or another. I'm comfortable with that, TA. There is 1000% guaranteed that this wedge will break before August 8th or on August 8th. That's an easy one. Yeah, I know it seems like it's right around the corner, unless you're living your life 5-minute candle at a time and you have to go through this shit. I'd rather not. But nah, I don't think it'll take that long. I'm just being silly. But I do think that there's a chance that we sit in this entire thing until this, is taken up. If we want to look at that, where our top order gets filled without having to leave, would be August 6th. Right? So you could fill that entire thing without having to leave this wedge. But at some point, we're going to run out of money, and they just keep adding more to the tops. Actually, it's gone down a bit. Let's see. What do we got now? It's 14. 6. Yeah, there's still about 6,000 there. If you take that top range into consideration, 657. Is that where I'm at? No, we got to pull this up a little bit. Interestingly enough, I think that's the measured move. Yeah. Yep. So you've got a whale or multiple whales trying to harvest the last bullish pattern that we're looking at here. Right, all the way up to that measured move. So far, we've absorbed, I guess, this much of it. And there's still, it keeps, the reason I say it keeps filling is because there was 7K before. There was 5K before. Right now, the range is smaller, but there's more Bitcoin in it. Shit is annoying. Give me a second. I got somebody coming over to drop something off. I got to open the door for them. I'll be right back. All right, what's good, family? Give me like two. Oh shit! I'm sorry about that. Sorry about your ears there. Anybody with a headset on just lost the ability to hear for a couple seconds. I'm good, man. I'm good. I just finished doing a little bit of research on this move that we've got going. So we're gonna get into this deep dive real quick, and then we'll start talking about what it means for our positions. Well, we might be in the deep dive when they come in, but yeah, I got you. All right, so let me see something here. All right. So we need to look at our Fed balance sheet really quick. This is a good way to do it. Oof, yen futures are up, up, up. We're about to talk about why. Look at that. Yeesh. All right. Everybody hear me okay? Discord, YouTube, making sure the audio is good. All right. Let's get rid of the TGA. Let's just look at the Fed. So I teased a little bit in the Discord that we're about to accelerate quantitative easing, but that's a bit of a clickbait. We are, right? You're about to see this tick up here in a big way, right? Which lets us know that the Fed is printing. But in a roundabout way, it's still about yields, right? Remember, we've been talking about for the last couple of weeks that the Fed is printing, but the money's going to stabilize yields. And the problem is that the yields, even with all that effort, are not stabilizing. Right. So the point of printing this money and buying US bonds was to keep the yield from going above 5%. But as you can see on the overlay, it has not been very successful. Right? This is on the offset. That's why it looks weird because of the, hold on, I'll fix it. Because we were using this for something else. You don't look at an offset when you look at the printing. So that's supposed to have the opposite effect, right? Why the hell are we printing money and buying bonds if the yield keeps going up? And the truth is, if we weren't doing this, the yield would be at 7%, 8% right now. The reason it keeps going up is because the East is selling off our 30-year bonds faster than we can buy them. Now mix that with the issue that we're having with Japan, right? They're doing everything that they can to save the yen, which includes dumping off 30-year bonds. If they dump off 30-year bonds, then we're pissing into the wind with this money. Right? It's just going to keep going up. So Bessett's issue is, and I'm not a huge Bessett fan, but Bessett's issue is, how do we use this money to actually affect bond yields so that we stop peeing into the wind? Right? And that's what our deep dive is going to be about today. So we're going to go into a short piece and then a longer, more detailed piece, and then we are going to go listen to the clankers chop it up. Give me 1 second to get everything set up. I'm going to make sure that everybody has audio on PC audio. Hold on. All right, put a one in the chat if you can hear this. We good? Everybody's good?
Shazam!
Give me 1 second. I'll let you look at Bitcoin for a second because it's going to take a little bit longer to make an edit here. Nah, for right now, all we know is that BTC is headed back to the bottom of the range. And until this wedge breaks, you know, fool me once, twice, 20 times, shame on me, or whatever it is. That Bush said that thing. This is one of those situations where the chart is going to have to prove every single little bit of this move. All right, give this a second to finish. I just had to edit 2 of the slides. I'm being as broad as I possibly can with this wedge as well, right? Like we're going wicks. We're going wick to wicks to wicks. Try to give it as much breathing room as it can possibly muster.
Bitcoin's last hurrah?
Last might be a bit much. But like, you know, when you're in a fireworks show and it starts to like get exciting, you're like, oh, is this the finale? And they're like, no, wait for it, wait for it. Like that. Not yet, but you can feel it sort of ramping up. We'll see. We can invalidate this right shoulder, which will go a long way. Remember, sentiment is really the issue right here, right? Because at the end of the day, this is just a range. The only reason this is a head and shoulders is because we had a deviation out of the top of it. I do want to point out that the same reason that the only reason this was an M pattern is because we had a deviation and it ended up playing out. So that doesn't mean it doesn't play out. But invalidating that and getting above 654 would go a long way for sentiment. The problem is that the top of our range is right there. There's a massive wall above. They think it's a coincidence that we've been stuck in this range, and right above the value area high of the range is where all this Bitcoin magically appeared to keep us from invalidating the right shoulder. You know? So if we invalidate it, cool. If you get through this much Bitcoin, you're 1000% going to slide through these liquidations. That's not even a question. I just don't. I see somebody with way more money than me making a lot of effort to keep that from happening right now, anyways, you know. We'll see.
I can't imagine selling 3,000 Bitcoin and then also like getting liquidated.
What do you mean?
Well, like let's say it's one person, and then they have a sell wall of 3,000 Bitcoin right there, but then it just pushes up through it, and their liquidation is right there too. So they missed out on both things.
Well, you'd have a bunch of cash though, right? Because you sold all that Bitcoin. Their liquidation isn't right above. This to me isn't somebody protecting a short. This is somebody getting out of a position at what is a reasonable top. Like I'm expecting a red August and a red September. All right, let's get into this deep dive real quick because YouTube's going to start to pick it up soon. And I like for y'all to get the sort of news before everybody else.
The United States government is actively deploying its own capital to save another nation's currency. It is a highly localized, highly pressurized move in the global foreign exchange markets that hasn't played out in 28 years. Officially, the administration frames this joint intervention as a simple gesture of financial friendship toward Tokyo. The public stance is that Japan's yen is weakening, the U.S. is financially strong, and Washington is stepping in to help an ally. But the global markets didn't discover the exact size of this intervention through a formal press release or a Treasury memo. They found out through a photographed physical note. This gap between the administration's friendly rhetoric and the reality of the trade suggests a specific tactical objective, one that reaches far beyond a simple favor for an ally. The leak traces directly to this photograph of Scott Bessent, the U.S. Treasury Secretary, sitting at a formal hearing. The image was captured by a Reuters photographer and immediately published globally. Clearly visible on the desk is a physical sticky note that explicitly reads, "To do, buy Japanese yen 5 to 10 billion." This diagram shows a $10 billion block dropping onto a scale against the $1 trillion daily foreign exchange market. The math proves this trade size is physically irrelevant. Deploying $10 billion into a market of that volume cannot structurally move the needle on the yen. A seasoned macro trader running the United States Treasury does not accidentally write down basic ticker symbols like JPY on a physical sticky note to remind himself to execute a multi-billion-dollar trade. Because the capital is far too small to move the market mechanically, the note was deliberately leaked to hijack the market psychologically. To understand why this tactic works, you have to look at Scott Bessent's pedigree. Macro funds are terrified of fighting him because he is one of the most successful currency assassins in modern history. Working under George Soros in 1992, Besant mapped out the vulnerabilities in the British housing market. He called the Bank of England's bluff on interest rates, forced a capitulation, and helped make $1 billion in a single day during Black Wednesday. Here is Shinzo Abe, the former Japanese prime minister. In 2012, Besant struck again. He front-ran Abe's own policy to print money, aggressively shorted the yen, and pocketed another $1 billion. When you leak a note showing that the U.S. Treasury is buying yen, you create an immediate psychological shockwave. Every macro fund heavily shorting the yen is suddenly forced to cover their positions out of pure fear. Besant is utilizing his reputation to execute the objective. He is weaponizing market psychology to drive the yen up without draining actual United States capital. This stark line chart tracks the U.S. national debt. It inflects violently upward, jumping from $34.5 trillion in March of 2024 to crossing the $40 trillion threshold today. The fiat denominator is expanding rapidly without a major domestic recession or a world war. This immense debt load traps the current administration in a macroeconomic trilemma consisting of 3 conflicting, non-negotiable goals: reshoring, price stability, and debt stability. Rebuilding the domestic industrial base and reshoring manufacturing requires a weak dollar, ensuring American goods can compete globally. But controlling consumer inflation requires price stability, meaning you need a strong dollar to keep foreign imports cheap. Activating this node directly cancels out the reshoring goal. Finally, debt stability requires constant economic growth and tax revenue to service the massive interest payments on that $40 trillion balance. The system can only support 2 of these pillars simultaneously. Attempting to maintain all 3 creates a structural conflict. We just witnessed a preview of system failure. When the Federal Reserve temporarily prioritized price stability, keeping the dollar strong, the 30-year Treasury yield violently spiked to 5.27%, threatening to tear through the financial sector. Reshoring factories is non-negotiable for national security. Debt solvency is non-negotiable because the system fails entirely if interest payments stop. Because reshoring and debt stability cannot be compromised, the math dictates the outcome. The United States dollar must be sacrificed and subtly devalued. The United States cannot openly declare a dollar devaluation without triggering a global creditor panic. The Treasury has to engineer this devaluation covertly, which requires a proxy. The cyclical flow diagram maps the last 40 years of Japanese trade. Japan sold physical goods to the West and recycled those dollars directly back into U.S. treasuries, making them America's primary banker with over $1 trillion in holdings. As the yen collapsed, Japan reached a breaking point. They faced exactly 2 choices to defend their currency: radically hike their own interest rates or liquidate those massive holdings of U.S. treasuries to raise cash. If America's largest creditor aggressively dumps U.S. debt at the exact moment the Treasury needs to issue trillions more to fund its spending, the U.S. bond market breaks entirely. The intervention to strengthen the yen is purely an act of self-preservation. Scott Bessent is preventing a panic sale of U.S. debt to ensure America can continue borrowing.
Yep.
The market is flashing a severe warning sign. Right now, a major AI-linked hedge fund just blew up, wiping out billions of dollars in capital. The question is whether this failure parallels the collapse of long-term capital management in 1998 or the new century bankruptcy in 2007. This timeline chart tracks central bank balance sheets. They violently spike vertically in 1998 and 2007, following systemic breaks, revealing forced monetary expansion. Overlaying gold's spot price shows a clear pattern. After both pivot points, gold established a permanent floor. The Federal Reserve cannot simply print trillions of dollars tomorrow without destroying its credibility. They require a localized crisis, massive systemic fear, and soaring long-term yields to politically justify the next massive liquidity injection. The current algorithmic drawdown across equities is a required clearing of leverage. The financial pain has to become terminal before the state is forced to turn the printers back on. This economic trilemma permanently splits the global asset landscape into two distinct buckets. The first bucket holds printable assets. This includes fiat currency, sovereign bonds, and paper promises mathematically subjected to infinite dilution. The second bucket holds non-printable assets. This illustrates the physical reality. Hard assets like gold bars secured in a vault, alongside Bitcoin, land, and energy. Navigating this environment requires tracking very specific terminal metrics: the 10 and 30-year Treasury yields, the yen to dollar strength, and the spot prices of gold and oil. The exact signal indicating the printer is about to turn on occurs when long-term yields keep marching upward while equities slide. Ignore the geopolitical noise about diplomatic friendships. Track the structural flow of sovereign debt, and position aggressively in the assets the state cannot print.
Well, we're already doing that. Look, just in case you think it's a joke, this is the picture. And by the way, that edit didn't work because the whole point of the edit was to put this picture into the damn whatever. This was the picture at Camp David with 1,000 reporters behind him. The little note that he writes to himself, quote unquote, to himself. Right? That's the way of the government trying to stabilize the market.
This is ridiculous.
Right? This is trying to cut down on the yen carry trade fears, basically, right? But will they be able to do it is the question. So let's go. Yeah, no, that's 1,000% real.
Oh my god, whoever said it's a joke, like, yeah, this is a joke.
All right, so all right, let's go into the next piece. Then I'll jump in with the clankers and we'll do the little podcast thing after. Let's dig a little deeper into this though.
Something happened in the global foreign exchange markets that hasn't played out in 28 years. The U.S. government is actively deploying its own capital to save another nation's currency. That is not a headline from a blog. That is the raw data. The visual on this opening slide is designed to communicate the weight of what we are covering. A massive iron anvil, $40 trillion engraved into its face, sitting in a spotlight on a dark stage. A figure stands next to it, barely reaching its base, looking up. That anvil is the U.S. national debt. That is the load that every single policy decision coming out of Washington is now being made beneath. Every intervention, every currency move, every leaked note photographed by a Reuters reporter, all of it is happening in the shadow of that number. This briefing is called Decoding the Sovereign Doom Loop. We are going to follow this story from the sticky note on Scott Bessent's desk all the way to the structural thesis that governs how you position your capital over the next decade. No opinion in this presentation. Only raw data, historical precedent, and the honest synthesis of where the math leads. Secure your position. Here is the event. The first joint intervention in the foreign exchange market in 15 years. The U.S. and Japan confirmed coordinated action to lift the Japanese yen from a near 4-decade low. This slide splits the story into two. Left side, the official story. A clean white tablet. A figure presenting it proudly. A signal of Washington's friendship with Tokyo. That is the administration's actual quote. The yen is weakening. Japan wanted a little help. Washington stepped in as a friend. Bruh. Right side, the raw data. Dark cracked stone. A figure on all fours with a flashlight shining into a crack that glows red underneath. Digging for what is actually below the surface. The raw data says something completely different. The U.S. government is actively deploying its own capital to save another nation's currency from a 4-decade low, an event unseen in 28 years. Two descriptions of the same event. One is the diplomatic cover story. One is the transaction. The gap between those two descriptions is where this entire briefing lives. We're not interested in what the press release says. We're interested in what the math says. And the math is going to tell us exactly why the U.S. Treasury showed up for Japan and why it had nothing to do with friendship. How did the world find out about this intervention? Through a photographed sticky note. A Reuters photographer captured a physical to-do list in the hands of Scott Bessent, the Treasury Secretary of the United States. The note reads, in handwriting, "To do, buy Japanese yen, 5 to 10 billion," published globally. Now look at this slide. 2 pipe paths branching off from that same note, centered and pinned for the world to see. Theory 1 is the dead end, marked with a red X, the mechanical accident. A seasoned macro mind, one of the most successful currency traders in history, needed to write down the ticker symbol JPY on a physical sticky note so he wouldn't forget to execute a multi-billion-dollar trade. Think about that.
Bruh.
This is a man who broke the Bank of England and front-ran the Japanese money printer. He does not write JPY on a sticky note. Theory 2 is the live pipe, the deliberate psychological weapon. A highly coordinated plant leaked to the global press on purpose. This is the Cypher perspective, and the logic is airtight. $5 to $10 billion cannot physically move a currency market that trades over $1 trillion a day. But if you leak that note to every financial desk on the planet, you do not need the capital. You just need the question the leak forces every short seller in the world to ask themselves. We break down exactly what that question did on the next slide. Here is what the leak actually accomplished. And this is one of the most elegant uses of market psychology you will ever study. The visual breaks it down in exact physical terms. Left, a tiny figure drops $5 to $10 billion into a dark ocean. The ripple it creates is almost invisible. Caption: a drop in the ocean of a $1 trillion per day FX market cannot physically move the yen. Physically, that capital cannot shift the yen price. The market is too large. So why do it? Center of the slide, those small physical ripples hit the label media leak. And what comes out the other side is a massive dark tsunami wave labeled macro fund short positions. The mechanism is pure psychology. Every macro fund in the world that was short the yen, multi-billion-dollar bets that the yen would keep falling, now had to ask themselves one question, printed at the bottom of this slide. Do I really want to fight the US Treasury? The answer is no. Every rational macro fund covers their short. Every covered short is a yen buy order. Suddenly, $5 to $10 billion of government capital has moved a multi-trillion-dollar market without spending a fraction of the real cost. Bessent did not execute a trade. He executed a psychological operation. The note was not a memo, it was the weapon itself. Now, you need to understand who Scott Bessent actually is, because this is not a random move from a bureaucrat. This slide is his ledger. 3 columns carved in stone, each one a completed operation. 1992, Black Wednesday. Target, the British pound. Catalyst, the UK housing market ran entirely on floating rate loans. Every homeowner had a variable mortgage. When the Bank of England tried to peg the pound to the German mark, Bessent, working for Soros, realized they could not hike rates to defend that peg without bankrupting their own citizens. Soros bet $10 billion against the pound. Britain capitulated. Result? Broken Bank of England. Profit? $1 billion in a single day. 2012, the Abe trade. Target? Japanese yen. Catalyst? Shinzo Abe takes power promising to print money and weaken the yen. Bessent front-ran the printer, shorted yen from the high 70s all the way to over 100 per dollar. Result? Front-ran the printer, shorted the yen. Profit? $1 billion. Present day? Target is the US dollar. Catalyst? $40 trillion in debt. Result? The question mark. A figure is literally chiseling it into the stone right now. The bottom of this slide says it plainly. Bessent is utilizing market psychology to devalue the dollar and strengthen the yen without spending a dime of US capital. 2 operations, $2 billion outcomes. The third column is still being carved. The reason the dollar must be devalued is on this slide, and the math is suffocating. The U.S. national debt expanded from $34.5 trillion to $40 trillion. That is a $5.5 trillion expansion in just over 2 years. No major recession, no global pandemic, no world war. That is simply what the fiat machine does now, and it is accelerating. The visual is 2 massive interlocking iron gears grinding against each other in the dark. Top gear, higher yields demanded. The bond market knows the dollar will be debased, so investors demand higher returns to compensate for holding paper promises in a currency losing value. Bottom gear, debt more expensive to service. Every point higher on the yield means the U.S. pays more interest on $40 trillion in outstanding debt, requiring more borrowing to fund those payments. Third gear, issue more bonds. More bonds push yields higher, which makes debt more expensive to service, which requires more bonds. A figure at the base pours gasoline directly onto a fire burning between the gears, fueling the loop from underneath. This is not political commentary. It is a mechanical description of a compounding spiral. The gear system has no natural off switch. The only circuit breaker is a deliberate devaluation of the currency the debt is denominated in. The gears are already turning.
This is the structural trap the administration is operating inside, and the visual captures it perfectly. A Penrose triangle, an impossible object. 3 walls that form a loop with no exit point. A figure is pinned inside it, arms pressed outward against all 3 sides simultaneously, holding the structure from collapsing. 3 corners of the triangle, 3 non-negotiable goals. Top, reshoring and manufacturing, rebuilding the domestic industrial base, requires a weak dollar so U.S. goods can compete globally. Bottom left, price stability, controlling consumer inflation, gas and grocery prices, requires a strong dollar. Bottom right, debt stability, high stock markets, low unemployment, tax revenue flowing to service $40 trillion, requires growth and a loose financial environment. The center of the triangle says it plainly. You can only choose 2. You cannot have all 3. Reshore and maintain debt stability? The strong dollar dies. Inflation spikes. Price stability and debt stability? Tight financial conditions kill the reshoring agenda. Reshoring and price stability? The equity and bond markets break. Every combination leaves one corner collapsing. The figure is not making a choice. The figure is being crushed by all 3 walls simultaneously. That is the actual position the administration is in. This is the geometry of the problem Besant is solving. We have already seen what choosing the strong dollar costs. For 6 weeks, Fed Chair Kevin Warsh prioritized price stability, keeping the dollar strong. The results are documented on this slide in 3 lines. The result? Stocks, gold, and Bitcoin all flushed down. AI speculation cracked. The danger zone? The 30-year Treasury yield spiked to 5.27%, the highest level since June 2007, the month before the global financial system began its collapse. The conclusion? Reshoring is non-negotiable for national security. That stability is non-negotiable because the system cannot service its interest payments if it breaks. Therefore, the dollar must be sacrificed. The visual makes the destruction physical. A massive gold cube labeled strong dollar price stability sits center frame. A pressure gauge next to it has its needle buried in the danger zone, steam escaping from cracks. A figure stands next to a crushed red down arrow chart. Bitcoin coins and a gold bar lie broken on the floor. This is what choosing the strong dollar path looks like in real time. The trilemma has already given us the answer to which corner gets sacrificed. What we are watching now is the mechanism, how the devaluation gets executed, quietly, covertly, through yen intervention, through a sticky note, without ever saying the word devaluation out loud. Here is why Japan specifically is the critical leverage point in this entire operation. Look at the visual. A massive stone pillar with Japan carved into its face, holding up the entire weight of U.S. Treasury market carved into the stone above it. The pillar is cracking, fractures running top to bottom. A figure is on a ladder pressing a bandage labeled USD JPY intervention over the largest crack, trying to keep the structure from coming down. The dependency. Japan is America's primary banker. Japan holds over $1 trillion in U.S. government debt, more than any other foreign nation on Earth. For 40 years, Japan sold the West physical cars, microchips, and manufactured goods, then recycled those export dollars back into U.S. treasuries to collect interest. That recycling is what allowed the U.S. to keep borrowing at manageable rates. The squeeze. As the yen collapsed toward a 4-decade low, Japan was approaching a breaking point. To defend their own currency, they had exactly 2 choices: hike their own domestic interest rates, which would implode their economy, or dump their US treasuries to raise dollar cash and buy yen. Fam, both roads lead to the same destination. The US bond market breaks. The pillar cracks. That bandage on the column, that is the yen intervention. The entire US borrowing apparatus depends on that bandage holding.
This slide makes the binary choice explicit. 2 paths, 1 outcome either way, unless the US intervenes. Left side, catastrophe, a figure falling into a massive sinkhole, cracked earth collapsing around it. Japan dumps US treasuries to save the yen, while the US is simultaneously trying to issue trillions more in new bonds. When your largest creditor is panic selling your debt at the exact moment you need to issue more of it, yields go parabolic. The bond market breaks. The equity market follows. The global financial system goes with it. Right side, intervention. A figure standing with their hand on their head, stressed but still standing. The US buys the yen. A stronger yen relieves Japan's pressure to dump treasuries. The panic sale of US debt is prevented. The bottom of this slide is the synthesis, and it is the most important sentence in this entire briefing. The US intervention is not generosity. If Japan's financial system goes down, it takes the US bond market and global equities with it. Besant is defending the sovereign credit card.
Shazam!
This sentence dissolves the official story completely. Washington did not show up for Tokyo out of friendship. Washington showed up because Japan's financial stability is load-bearing infrastructure for America's ability to continue borrowing. The yen intervention is self-preservation. The sticky note was a national security operation.
Right now, an OpenAI researcher's hedge fund just blew up, losing billions of dollars. And the question that matters is which historical scenario this maps to. This slide gives you both paths and reveals what they share at the end. Center. Today, an AI researcher's hedge fund blew up, losing billions. Is this 1998 or 2007? The path splits into 2 wires. Top, 1998, the LTCM collapse. A single massive hedge fund implodes. The Fed orchestrates a bailout, cuts rates, and the S&P 500 surges 55% over the next 18 months. Temporary crisis, massive recovery. Bottom, 2007. New Century Financial, a subprime lender, files for bankruptcy. Dismissed as isolated. The market crashes 50% shortly after. Systemic collapse masked as a one-off event. We do not know yet which path this AI fund collapse represents, but here is what the right side of this slide reveals: the golden thread. Both paths converge into a single glowing gold line that a figure is now walking forward on. Regardless of the path, the ultimate state response is identical: money printing. In both historical scenarios, gold never traded lower again. 1998 or 2007, the endpoint for sound money and non-printable assets is the same. The path is different, the destination is not. The golden thread does not care which scenario this is. Whether this resolves like 1998 or cascades like 2007, here is the dark thesis for the full sequence if we follow the second path. Macro analyst Luke Groman is direct. The Fed, under an inflation hawk, cannot simply turn on the printer tomorrow without destroying their credibility. They need political cover. They need the pain to become undeniable. The visual is a 3-stage production line in a dark factory, each stage lit from above. Phase 1, algorithmic drawdown. A machine drops weighted labels: E for equities, G for gold, B for Bitcoin, crushing everything. Gold bars and Bitcoin coins broken on the floor. Heavy drops across equities, gold, and Bitcoin clear out leverage. The smart money positioned in those assets gets shaken out first. Phase 2, terminal pain. A cracked machine with gears, a thermometer bursting through the top, red overflowing, glass shattered. Long-term yields threaten the insolvency of the state. The Fed requires systemic fear, layoffs, financial panic, to politically justify action. The pain has to become terminal before the rescue can begin. Phase 3, the printer activates. An industrial press rolling out sheets of paper, green glow. A massive monetary rescue is mounted, without losing inflation hawk credibility, because the crisis now justifies it. Everything flushes first, then the printer turns on. Then the assets they cannot print undergo a violent, permanent revaluation upward.
This slide is the portfolio thesis in its most distilled form. 2 stone tablets, one decaying, one pristine. A figure stands between them, facing the choice. Left tablet, printable assets, crumbling gray stone, chunks falling off. Cash, currency icons, sovereign bonds, paper promises. Supply elasticity, infinite. The government can produce more of these at will, with a keystroke. State control, absolute. Performance in a liquidity event, debasement. When the printer turns on, these assets lose purchasing power in exact proportion to how much new supply is created. Right tablet, non-printable assets. Clean white stone, solid, no cracks. Gold, Bitcoin symbol, factory building. Supply elasticity, mathematically or physically capped. Bitcoin has a hard cap of 21 million coins written in code. No government can override it.
There's no
Gold
second best
requires
crypto
energy,
asset. There's a
equipment, and
crypto
physical
asset. It's called
extraction to
Bitcoin.
increase supply. State control, decentralized or sovereign. Performance in a liquidity event, violent, permanent revaluation upward. The framework is simple. The printer creates more of the left side. The left side flows into the right side, the only assets that cannot be diluted. The right side reprices upward to absorb the excess monetary supply. Position on the right side of that table before phase 3 activates, not during, not after. The revaluation is violent precisely because most people wait until they can see it, and by then, the price has already moved.
3 metrics to track on the terminal right now. This is the operational dashboard for the thesis we just built. A stone control console with gauges and dials, a figure manning the controls in real time. Metric 1, 10-year and 30-year Treasury yields. These are the pressure gauges on the sovereign credit system. If long-term yields keep marching upward while equities are sliding simultaneously, systemic pressure is building. The bond market is telling you the state is losing control of its borrowing costs. This is phase 2 of the dark thesis beginning. Metric 2, JPY/USD strength, the ongoing covert intervention. Every time the yen strengthens unexpectedly, you are watching the Treasury move. Every time it weakens back toward 4-decade lows, the pressure on Japan builds, and the risk of a Treasury dump rises. This gauge tells you how much oxygen is left in the intervention. Metric 3, spot price of gold and oil. These are the ultimate barometers of fiat devaluation. Gold priced in dollars tells you how fast the dollar's purchasing power is eroding. Oil tells you whether inflation pressure is returning. When both of those gauges move higher together while bond yields are spiking, the transition from phase 2 to phase 3 is in progress. These 3 metrics are what we monitor on the Cypher terminal daily. Track the flow, ignore the noise, secure your physical and digital perimeters. End of transmission.
All right, so we're seeing how everything ties back in, right, to what we've been talking about since December. So I would love to talk to some of these we've bottomed already people and see how they in their minds when they're doing their analysis, they make peace with all of that. Right? You have to get out of the charts sometimes. Right? A pretty pattern on the chart doesn't tell you the whole story. And I think people who have communities that know this, because I know they know this, I know they've been in this long enough to understand this, but still sell their community hope through patterns and, you know, divergences or whatever the hell. But doing them a massive disservice. I just hope that YouTube AdSense or whatever is worth it. There's just a lot going on, you know? And we're watching people with way more money than us struggle to position themselves. But like I said, we know what to watch, right? If equities continue to slide, real yields continue to go up, you know, gold spikes while oil is moving, then we know we're getting closer to that breaking point. Yeah, Bitcoin knows when we do deep dives, market makers like, I think market makers stop and just watch the deep dives. All right, we're gonna put on the clankers. We can watch the chart while we do that, but I'm gonna jump in with the clankers and chop it up with them about today's events.
Usually when we look at global finance, especially at the sovereign level, we just kind of assume there's this rigid, almost mechanical logic to it all.
Right, like a highly sophisticated game of chess.
Yeah, exactly. Like every move is telegraphed, calculated, and strictly defensive. But right now, if you pull up the foreign exchange tickers, there is just this mind-bending contradiction playing out in real time.
It really is wild to watch.
It is. Because the United States government is actively deploying its own capital, like billions of American dollars, to save another nation's currency from a 4-decade low. We're talking about the Japanese yen.
Which is, not something you see every day.
No, not at all. And this isn't some routine back office housekeeping thing. I mean, this is the first joint intervention of its kind in 15 years.
It completely flips the traditional script on national self-interest, right? I mean, sovereign nations, especially ones with their own massive fiscal deficits, they just...
Oh, wait. Someone wants to join. Hey, go for it.
What's going on, guys? My bad. Didn't mean to cut you off. Just want to let you know that you're on YouTube right now and you got the whole Cypher family listening. It's going to be a big one, so I'll jump in from time to time. It's Dbloc, by the way. Gather yourselves. No, really, take your time. I think I made him shy. No, really, I think I broke it. I mean for you guys to run off.
They had enough of your attitude.
Right? Guys, come back.
I thought they did come back.
I am so glad you are on the same page with us.
It really is a crucial point to grasp because it feels so
Nah,
completely
they really just
counterintuitive.
freaked out for a
Exactly. I
second.
mean, why would we spend our own capital to help an economic rival?
Especially when we have our own massive fiscal deficits to worry about right now.
These nations just do not typically act as financial paramedics out of the goodness of their hearts.
Not for free, and certainly not without a very specific hidden agenda behind it.
But if you listen to the official story from the administration, that is oh yeah, go on.
Yeah, it's Dbloc. Like I said, say hi to the Cypher family. We're on YouTube. You guys are listening, being listened into while we go over the report.
Shout out to the Cypher family tuning in on YouTube right now.
We love having the family in the building, especially since we're talking about operating.
That deep charcoal aesthetic you mentioned really sets the mood for what we're uncovering.
It's the perfect backdrop for looking at what's actually happening behind the scenes.
We were just talking about how the official narrative is essentially a bedtime story.
Right. They want us to think it's just a neighborly cup of sugar for Tokyo.
But for the Cypher family, we know it's about systemic survival, not just friendship.
Exactly. It's a strategic smokescreen to protect the U.S. bond market.
What's fascinating here is that the intervention wasn't announced at a podium.
No, it came out through a yellow sticky note on a folder.
It was stuck to a folder held by the Treasury Secretary, Scott Bessent.
A photographer caught it and it said, buy yen 5 to 10 billion.
It sounds so amateur, like he was just picking up milk after work.
Okay, let's unpack this. Was it a mistake or a calculated move?
If we connect this to the bigger picture, the mistake theory actually collapses.
Here's where it gets really interesting. The math of the trade just doesn't add up.
The foreign exchange market moves over $7 trillion every single day.
So 5 billion is basically just a drop in the ocean, right?
Exactly. It mathematically cannot move a currency that's been sliding for 40 years.
So what does this all mean if the money isn't enough?
It means this was pure psychological warfare designed to hijack market sentiment.
You're saying they wanted the hedge funds to see that note?
Absolutely. It was about forcing the big whales to blink first.
These funds were all shorting the yen, betting it would keep crashing.
But the second that photo dropped, the apex predator, the Treasury, entered the chat.
That makes everyone scramble to buy the yen back to protect themselves.
Precisely. The Treasury used the market's own leverage to do the work.
It's like what we teach in the academy about surfing the institutional drift.
This raises an important question. Why would a high-level official take such a risk?
Because Kappa Cent isn't a rookie, he's a legendary currency tactician.
He worked with George Soros during Black Wednesday back in 1992.
That was when they famously broke the British pound, right?
Yes, and he did it by finding a structural weakness in mortgages.
He knew the Bank of England couldn't raise rates without bankrupting their people.
He's a math-driven operator who knows how to engineer these financial optics.
So he's running the same playbook now, but from inside the government.
He has to, because we just hit that terrifying $40 trillion debt milestone.
40 trillion? It's hard to even wrap your head around a number that big.
What's worse is the velocity. We added 5 trillion in just 2 years.
And that was without a war or a major global pandemic.
It shows that massive deficit spending is now the system's foundational state.
This brings us to that concept of the fiat denominator we mentioned.
Think of the economy as a pizza being cut into more and more slices.
But the government isn't baking more pizza, they're just diluting your slice.
That's why your purchasing power feels like it's evaporating in real time.
It creates this trilemma where the government is stuck between 3 impossible choices.
They want reshoring, price stability, and debt stability, but can only pick 2.
If they keep interest rates high to fight inflation, the debt interest kills us.
So in a survival situation, they have to sacrifice price stability.
They need inflation to erode the real value of that 40 trillion in debt.
But they can't admit that, so they use backdoor tactics like the yen intervention.
Because Japan is our primary banker, holding over $1 trillion of our debt.
If the yen collapses, Japan might dump our bonds to save their own currency.
That would send our interest rates through the roof and trigger a meltdown.
So defending the yen is really just the U.S. defending its own credit card.
It's all connected, like those AI hedge funds that recently blew up from rate spikes.
When the plumbing breaks, the government's only move is to print more money.
This is what the report calls the dark thesis pain, is the prerequisite for printing.
The Fed needs a visible crisis to justify turning the liquidity hoses back on.
Which leads us to what we call the great revaluation of assets.
You have to distinguish between printable paper promises and non-printable hard assets.
Like we say to the Cypher family, follow the money into gold and Bitcoin.
When the fiat tidal wave hits, it flows toward things with a limited supply.
It's not that the assets change, it's that the dollar loses its weight.
Keep your eyes on the bond yields and the yen's movement this week.
Those are the real heartbeats of the machine we're all operating in.
It's a lot to process, but understanding the plumbing is your best defense.
Thanks for jumping in and being part of the conversation today.
We really value the insights you bring to the show.
I made him
Stay
shy.
curious,
Look at that.
Stay sharp, and we'll talk to you in the next one.
Until next time, keep questioning the narrative and watch the drift.
Take care, everyone.
I made him shy. Nah, it messed up their audio. It doesn't matter. We went over most of that. I think we covered it pretty well. I'll post the full videos and the full podcast in the Discord though, if anybody does want to go through it. But yeah, this was what it'll look like. Right? As we print money to buy yen, we will devalue the US dollar, and when that happens, everything that's real, right? Hard assets that can't be printed, that can't be debased, have no choice but to go up. You know, a lot of the bull market is speculation, but a lot of the bull market is also the dollar collapsing, right? If you're holding an asset and it's valued in dollars, and the fiat that you're denominating that asset in loses value, right? Then automatically it's going to cost you more dollars to buy that asset. which is why that's my main thesis for Bitcoin. As long as the U.S. government keeps debasing the U.S. dollar on a regular 4-year schedule, then I will be sitting in hard assets. Timed properly, of course. So now in the next couple of days, when you see all the YouTube videos about this, you'll be able to sort of separate the bullshit from the what matters. Yeah, it's been a lot. You gotta realize a lot of these dudes, first of all, a lot of people on X are just AI agents. And the thing with letting AI agents post for you and write shit for you is that all you're gonna get is the consensus. Right? They're just gonna go out on the internet and they're gonna find what the consensus view is, and that's what they're gonna keep spitting out. So then it just keeps getting, so one or two big YouTubers tell you it's the bottom, and then all of a sudden everybody's got some sort of hot take. And again, right? I don't have all the answers to the universe, but I do have some questions that need answering before I can jump on board with even entertaining the idea of being at the bottom. And that's all these deep dives are, right? These are for me the questions that need to be answered. All right, so we hit bottom, cool. We just hit all-time high on ES. What does ES do if we're at bottom? Does this legacy just keep pushing for the next 4 years? Like, what's your thesis on that? And then you just hear crickets because they haven't thought about it. Right? Or they'll say, yeah, it's some sort of legacy super cycle. AI is just going to keep the market up. And cool. Though, I mean, if you can answer the questions, whether I agree with your thesis on like how you analyze the events or whatever, none of that matters. All I really care about is that if you tell me it's the bottom, that you have a fully sussed out thesis on why it's the bottom. Right? Especially if you've been in the market for, 10 years. When you go watch these have we bottomed yet videos, or I get not even have we bottomed, when you go watch these bottoms in videos, they're like 5 minutes long, like 8 minutes long, 3 minutes worth of sponsorships and 2 charts and stuff. Like that's all it took. Like that's all it takes for you to ignore all the historical data and everything else. Like maybe I just have too much of a threshold with my conviction, right? Like, but we'll see.
The way that tubers have like those paid sponsorships in the middle of their video, and then I can't get to my remote in time, and I've paid for YouTube Premium.
Oh, I'm a ninja with that shit. I hit that little forward 5-second wheel, pop, 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 tap that shit like 4 times, bang, bang, bang.
Yeah, but when you're putting together a piece of furniture from Amazon.
Yeah,
You're
no,
on the floor.
you're
And
just
you
gonna
can't
have to
find
eat
everything.
that sponsorship. That's all.
Sucks.
It happens.
They discovered that. It's crazy. They were like, these people are skipping our advertisements in the first 4 seconds. We have to think of something.
Well, it's a direct sponsorship to the actual, instead of getting paid through AdSense from like YouTube, which is literally nothing, the sponsor's actually paying you for, 1 minute shout out, or whatever it is. It's a better way to do it. For me, like, it has to be something I use. Like, I can't do that. You know what I mean? It's just some random shit I've never used. It'd be an exchange I use, TradingView, or, shit like that.
This is
NordVPN.
my favorite peanut butter by Dbloc.
Yeah, like that sort of thing. Like, I'm not gonna say, I don't care how much they pay me. The peanut butter tastes like shit, you know? I've always been like that, though. I've worked a lot of sales jobs, and I did really good in sales jobs where I thought it was a good deal. I did really bad in sales jobs where I thought it was like a hustle. Just couldn't, you know what I mean? Like, I'll call the person up, you're cold calling somebody or whatever, and then they give you a rebuttal and you agree with their rebuttal. You're not supposed to be like, all right, have a good day. Like, you're supposed to keep, but for me, I'd always be like, yeah, that makes sense. That's the same reason I wouldn't buy this shit. Like, what am I supposed to do now? Lie for $8 an hour? I'm good. I've told this story before, but the worst one ever was I worked for the Red Cross. Like, when I was young, it was one of those jobs where you didn't need any experience. You were just on the phone. And it was asking for blood donations, right? So there'd be like some big news story, like the day that I've told this story before. I know I have. The day that I started, some girl had gotten in an car accident. She needed a blood transfusion, needed a bunch of blood, right? So my first calls were all, hey, tell them the story, da da da. And these are people who've donated before. So
Thanks for the deep
super chat. Appreciate you, Marisetti. Appreciate the support, bro. These are people who were like, I guess they're on the list because they've given blood before, right? So they've done it before. So I'm like, cool. You feel like you're helping. You're like, oh man, I hope this little girl gets the blood she needs, right? So then you go to lunch and come back from lunch, and I sit on the computer and look at the script, and it's the same script. So I asked the supervisor, I was like, what's up with this little girl? Like, she's been in intensive care for like 4 hours. Like, oh no, she already got the blood, but we don't refresh the script until the next day. I was like, so I'm going to be calling people during dinner to ask them to save this little girl that's already okay. Like, I walked out, bro. I couldn't do it. I was like, nah, I'm good. And like, it wasn't even at the time like I had huge like ethical sort of, I was a bit of a thug at this time. But it just felt, just had an ick to it. You know what I mean? I was like, nah, I'm good. That's nasty work. But yeah, if you've ever sold, like if you've ever had to sell anything over the phone, it's hard. But try asking people to leave their house and come give you blood. It's a tough sell. I'm a really bad employee, y'all. Like, we're family, right? We could be honest with each other. Suck as an employee. I spend too much time doing the math on how much money you're making as a boss, right? Like, how much money I'm making the company versus how much I'm getting paid. and how much time I'm spending doing it.
You see Ethereum getting its first monthly death cross?
ETH. That's actually pretty good for this chart because we know that those death crosses usually end up having short term, anyways, end up having like an opposite effect. Where's my 200 and my 50? Where the hell is my 200? I need an older ETH chart. That's what it is. No. You sure it's on the monthly?
Well, I just use well, maybe I said it wrong, but I just use the golden cross indicator and I think it's just, oh, that's a 13. It puts a golden cross when the 13 crosses over.
We're gonna fight, bro.
Hey.
Nah, they'll have, yeah, you can, there's, some of them have it to where you can set it, maybe you set it with the 13 and the 50 for the strategy and then you forgot and then you just looked at it like.
This is just a golden cross indicator. Like I just typed in golden cross and
yeah,
whatever settings it has is what it, but I don't even think this has a 200. So a death cross is the 200 crossing over the 50?
Yeah, 50 cross down over the 200 is the death cross.
Oh. So this indicator's
This is the
broken.
2 week. That's as close as I can get, and they're quite a distance away. Actually, maybe hold on, maybe I can get a 3 week candle in here. No, it won't let me. Custom interval. Nope. Between the 2 week and the 3 week, it disappears.
Okay, well, what the heck is this?
Got me all excited about it.
So does that mean this indicator is not a good one?
Which indicator is it that you have?
You just type in golden cross in your indicator.
Yeah, but go into the data and see what.
Like the input?
Yeah, go into the input and see what the two EMAs are set to.
Just says 13 and 49.
Yeah, so that's not. That's weird. Go down to the little thing at the bottom and reset to defaults. Reset the indicator to defaults just for shits and giggles to see if somehow.
Okay, I did. I mean, you know that this isn't your indicator, right?
No, I know. I'm just trying to figure out why anybody would make a golden cross indicator with those specific MAs, and then make sure they're MAs and not some weird like some MA or.
It says, well, it says fast MA period.
Yeah, that would be the fast one is just the small number, and then the slow one is the big number.
Do you know how long I've been using this indicator, Dbloc?
Well, and nobody like corrected you before?
No, because freaking team was like, "Oh, look, we got the golden cross. We gotta go on the cross." All right, I'm opening alone.
I'm dead. Nah, the one traditionally that most people use is just type in 50 and 200 EMA. And it's just a simple 50 to 200, and it has the low crosses when it crosses. And somebody just try to get fancy and make an indicator with some weird defaults. The reason it was automatically weird is because we just had a green month. So for it to be, you know what I mean? And yeah, you get it. What's going on, Deep? Oh, why didn't anybody tell me that the scalping dashboard wasn't up? I didn't realize it. There you go. All right, let's see what we got going on.
That reminds me, I have no idea what's going on. I better go read.
I guess it's a little late, but it's never too late. You didn't miss much. Just rewind. I got hiccups like a 5-year-old right now. Just rewind it. It was like maybe 40 minutes long, 30 minutes long.
Was that the Squid Games?
That was market maker. Market maker getting ready. Went into the office. Yeah, Squid Games basically.
Oh, were you talking to me about rewinding?
I was talking to Scoop.
Oh,
Not all about you, Tana. Okay.
why not? I listened to that whole thing, but I don't think I was able to retain any of it.
You gotta watch a couple times. I'll post it in the Discord.
I mean, I hear US, I mean, it just seems so dumb. It's like the fact that I can't believe it just seems like a story,
Yeah.
fairy tale. It's just a ridiculous story.
The most exciting thing about that entire story is how dumb the whole note thing was. Other than that, you're literally just talking about really boring macroeconomic shit. But it is a level of confluence to the idea of things continuing to go down, which is really the main sort of like TLDR, you know,
Yeah. Yeah, I've been seeing
better
it back.
before it gets worse.
You still, so the timeline's looking good, right?
Yeah, so far everything's looking good. I mean, I have a bigger concern, honestly, um with things not looking better right now. Like we're at the point where we should start seeing like and I don't even mean like the chart. I just mean news and stuff starting to twist a little bit and turn. I do want to see S&P come down pretty hard over the next month or two, because then we're going to have a different issue, right? If we get to the end of September and all of the bad stuff that we're looking at hasn't played out yet, then it's like, you know, then it starts to get a little spooky. You're already hearing people talk about a bear market super cycle. Like, hey, aren't you the same bull market super cycle guy? He's like, nah, I told you it was a super cycle. I never said if it was a bullish one or a bearish one. You did too. I don't know. I know it always looks bad right before it gets better.
It does feel like a can has been kicked. I mean, even if I use Fibonacci, it just the for the S&P,
Mm-hmm.
there's just nowhere to put it where the next extension is believable.
We were looking at this when we were up inside of this range. And I was saying that this ends right in an ATH in July. I was wrong. It happened, you know, a week after or whatever, but that it would end in a swing fail pattern, right? So as right now, if we come back into this range, that was it. My opinion. If we lose this and come back in here and swing fail, it's over. But a lot of people have been blown up trying to call the tops of bubbles like this. Right? We've had 3 bubbles in the past that were notoriously hard to call the tops on. I mean, people have been calling the top of the bubble since down here. Right? But what's really scary about this more than everything, and I hate to be doom and gloom, but it's a bear market. So, you know, Halloween, we play spooky music. During bear markets, we pay attention to spooky news. This is our bubble. These are the last 2 bubbles. You know, the .com bubble, spooky bubble, everybody's scared of, end of the world bubble. Housing bubble 2008. Countries went bankrupt. This is how hot we've been cooking since then. Like, can anybody be surprised if it goes? You know? Did we think it would pop here? Hell yeah. Thought it would pop there. Why wouldn't I? At that point, we were still like this. But that was before AI. So unless we got another trick up our sleeves, right? This here was the last time that anybody thought was our current bubble at the time. Right? This was our bump and go pattern. And then at the time, people that bought this breakout, right? We looked at as pigs. Well, I looked at as pigs, right? Pigs who think the Fed will save them. Because the idea was the Fed will cut and keep the hope alive. Well, they didn't cut, but AI came in and so a lot of people have looked very stupid trying to call the tops of these things. But that's why I try to play as close attention as I can. And I don't try to hang my hat on any one sort of data point, right? I need confluence. I'm just seeing a lot of that confluence now. Looks like my mic's working. You guys can't hear me? How am I muted on YouTube? Oh. You got me with that one, Scoop. That's how you know it was nice, though. That was smooth. You had me checking shit. Nah, you're good. Thought I had just pressed something right now.
So you're waiting for it to reject here, this yellow line.
I mean, that's the top of the range, right? Like, all we can do is follow the trend. And right now, the trend has been inside of this visible range. So if we can't get above value area high, then I expect it to come back down to point of control. If we go to point of control, it looks like we break our wedge, right? If point of control doesn't hold, even without a pattern, you would look for value area low. Even without that, you would look for psychological range to retest, right? Even without all that, you would look for that liquidity to get taken. Even without all that, you would expect that if you lose this value area right here, that you would, this high volume node, that you would fall into this gap looking for support. About like 5 or 6 levels deep. And again, all of that can go to shit if somebody with way more money than us decides to do something crazy. Just don't think we're in the sort of macro environment that makes somebody that has that type of money feel like taking that sort of risk.
Stop it. I just broke even at the boat.
Mm-hmm. You heard the man, market maker. Job's done. Let's go. All right, give me a second, y'all. I'll be right back.
Why is the whole casino parking lot shaking? What's the deal?
What's up, B-Man?
How you doing?
I'm all right. How are you?
Good.
All right. You're at the casino?
Yeah. I'm leaving. I'm in the parking lot. I broke even on them. I said, I'm done.
No, what did you have? Did you have fun?
Yeah, I had fun. I got some wings and some beer and broke even, so I'm a bounce.
Heck yeah.
They tried to hardball me, but it's cool. I saw some veterans in there. I saw this guy named Larry. He's a 30-year veteran. He was in there. I was like, damn, Larry, you're still coming here?
And then he said, "Welcome back, you mad."
We had a good time chopping it up, me and Larry. We like really connected on like some old memories. Like this casino has been through two name changes already. It's on its third right now. It used to be the Flamingo, then it was the Isle of Capri. Now it's called Bally's. It's kind of a shithole type casino and all that, but I like it.
No, that's how you know crypto's boring, is you're at a casino.
All right, I'm about to short this dinner. I'll be back. I'm here. I'm watching the chart. I'm just going to eat real quick. Ladies, gentlemen, what's going on, family? Oh, what a surprise. We're still here. Shock. What a shock. What a shock. What's our soul wall looking like? Thin out a little bit. Drum roll, please. What? Bro, what am I looking at? Okay, I was gonna say, yo, I was about to ask, what the hell did y'all do while I was gone? All right, so 652 to 656, is that upper wall gone? The upper wall is gone. This one was here. I hate when it does this shit. It's so annoying, bro. Yeah, it's back here. All right, so 656 to 652. Thinned out a little bit. $4K. And it's smaller in size. 656 to 652. Right? Yeah. It's a new strategy, I guess, right? Just go sideways and bore the whales to death. Do we ever get an update on Neve and his turtle? Mm. What are y'all been up to? I'm trying to control the damn tape so it doesn't go up that high. Number of rows. There we go. Oh, look at that. Perfect. What's going on, Neve? It's funny. Just did a deep dive about an hour ago covering it. If you didn't see it, just rewind the stream until you see the content. We just covered it in depth. I don't trade Forex though anymore. I don't know where Mike is. Mike trades yen heavy though. I know Mike is gonna be all over that trade. About 3/4 the way through this measured move. I don't know why I even have volume up. It's pointless. Take that shit off. I mean, it's a turtle, right? Like, how much damage could it possibly do? Oh yeah, I mean, don't get your finger near any of there. Yeah. But like they're mad slow. So like just put a bell on it or something so you can hear when it's moving. A tortoise is just a bougie turtle. Fancy ass turtle. Bro, just keep it. It's not gonna bark. They can't prove you have it. The tortoise chose, you know? These turtles ain't loyal, bro. If it so easily went to Neve, was it ever really theirs? I mean, it just got to be an inside turtle. So you got to build it like a room with astroturf and whatever turtles like to do. It's true. On what time frame, Allie? Daily. Oh, you mean at 72? I don't see that. No, we got to prove that we can get above that 50 in May first and foremost. If we can't take that and hold it, we already tried once. We'll see. I think this whole run is out of gas, if you ask me, though. Not because of anything that's on the chart. The chart isn't necessarily bearish on the macro. Actually, quite bullish. I don't have a lot of faith that it's gonna hold together. We'll see. Luckily, we only have maybe 4 or 5 days for it to prove itself here. Because if it rejects, it's gonna reject and take out these lows. It's not just gonna sit there. I'm personally expecting a red August and a red September. But I am open to I'm open to whatever the chart gives us, you know. If we're still green 2 weeks into 2 weeks into August, then we can say that things are a little bit more bullish than I expected. Because I expect this to already be on a red August by the second week. So we'll see. That'll be like a little line in the sand. Can't wait till this shit's over though. Like I really can't wait to be on the other side of this. I just assume it was a big zoo turtle, bro. Like I'm imagining him sitting with a dinosaur at this point. Just more fun that way. Yeah, be super cool. I've had one too many cups of coffee today. My bad. Let's get it. Finally, some action. Gloomy with the 10 gifties. W Gloomy. What's going on, y'all? So I guess a couple minutes of excitement and then back to the bullshit. It looks like. They're saying that cold card hack might have been an inside job now. Do I do who? Andrew. The name doesn't look familiar. Is that the way you spell his name? Let me see. It rings a bell, but let me Google his name. No. No, really. Why is he saying the bear market's over? Oh wait, I think I've seen one of this guy's videos. He's got like weird eyes. Excuse me. Oh look, I was just about to say it looks like at least he's up on game right now. I think it's that he uses some sort of weird lens in his videos. But every time I pass by one of the thumbnails, I remember thinking this guy's got weird eyes. I see that his last video. Yeah, the concept of the trilemma has been around forever, right? It's not something new. But that's good. That means that there's going to be more and more videos coming out. They're among us. Yeah, it's horrible. But how y'all just gonna sit there and let me doom scroll like that? Come on, man. Not okay. Stupid rabbit holes. Mm-mm. Guys, please be careful on Discord. I mean, there's only one way to pay through the WAP. Somebody just got scammed for $50 or a while ago and is wondering why they're not in the group. And now apparently it's my fault and they're getting all snippy with me. Just be careful, y'all. There's literally nothing we can do to stop it. Every single Discord group has people pretending to be the person that runs it. But also take some personal responsibility if it does happen to you. I'm not really jumping up and down to make any moves right now, bro. I'll be honest with you. As long as we're stuck inside this damn wedge. To me, it sounds like a bunch of bullshit. I think this is somebody that was actually trying to scam people, and they were just trying to scam me to get back into the Discord. Because I'm rereading this conversation, and it makes zero sense. They paid in 2025, and they're messaging me now to ask why they're not in the group. I mean, some random Bitcoin transaction from 2025 to a wallet that's not mine. That shows a while ago. Less than a year, right? Because it was after the bear market started. Now look, they send me this message, right? Send me screenshots of deposit after payment for documentation and confirmation purposes. I'm never going to type that sentence out to you. That's a lot of words. So then I was like, hey, what's this for? It's an old transaction. And this is our first message. And instead of answering the question, they're like, why was I removed from the group? It says lifetime transaction, $50 full access. I did what I should, but I was removed. I was like, when I asked you what it was for, because I don't remember having a conversation with you. There's 2025. How'd you get the address to send it to? My memberships are sold through the WAP. Unless you speak to me directly, can you send me a screenshot of our conversation? And then they send me this. Like, it's right there. It's not me. First of all. Second of all, listen to the conversation. Thanks for being part of my Discord community. Has anybody received a message that's anything like that from me ever? What do you intend to gain by joining the community? Right. So I'm like, I'm sorry. It looks like you might have got scammed, right? Look at the name, what I suspected. And then they want to get all snippy. Same name. It was a go. Your Discord group. Yeah, it's easy to pretend. I'm like, bro, this is me. You see the difference? No dot. You know? So why'd you invite me to your group then? Anyways, good scam. Yeah, I'm not buying it, gang. I'm not buying it. Damn, why did I just look at that? They're making homemade cinnamon rolls. Oof. That's what I said, bro. Especially on anything that's Discord, Telegram, any of that shit. Twitter. And I mean, honestly, if it did happen, it sucks, and I'm sorry, but there has to be some personal responsibility. No, it sucks to feel like you got, especially when you look and you're like, damn, there's something you could have seen. But that doesn't make it my fault. It doesn't make any sense. Nah, there's no way. It was after the top. It can't be 23 months. Oh, 3 months. Okay, yeah. It's more like it. I've been there, bro. I got some errands to run in the morning. I gotta make it an early night tonight. Who's gonna buy it? Like, where does the money come from? My only question is, where does the money come from? 9 times out of 10, that's my number one question. You know what I mean? Like there's only so much money at any given time. Well, you know what to do, bro. 4,000 Bitcoin on market. Slap that green button and take us out of this misery. Yeah, it'll come out of stocks, but where will it go into, right? Like, it doesn't come out of stocks to go into speculation. And money will come out of stocks and go into like defensive plays while everybody catches their breath and like reassesses. So I'm looking at either bonds or the gold. I think gold runs for a couple months while everybody wraps their head around legacy going down and all that good stuff. You know, and then people start to soberly sort of look at Bitcoin sitting at its bear market bottom. Like, oh, hey, we remember you, old friend. It's still there. Got a little scatter shocked at this point, but still plenty of Bitcoin to chew through. It's just the slow motion nature of it, right? It's not even the structure is great. I mean, this structure is fine, except for the, you know, the main overall problem obviously is that wedge, right? Your most present structural problem is that we're putting in this rising channel. Right. But as far as how it's building out, it's beautiful. Right? Your resistance is cleanly turning into support. And so that's decently clean price action. It's just painfully slow, you know? Not fun. But it is respecting levels. Yeah, I mean, I wouldn't be in a big hurry to throw Bitcoin at that sell wall either, so I'm not surprised that we don't have tons of buy pressure here. It's just annoying because we're almost done with this measured move. We're just stalling out the last, quarter. Little do they know my greed level is high. Joke's on you. Don't play with me. I'll give it all back. No way, what? It's not what I'm at. Just screw the dominance chart. That shit is gonna be broken anyways going into the future. $13 trillion coming in the stables. What the hell's a dominance chart supposed to show us? I'm just hating. Yeah, it got stunted a little bit, unfortunately, but But it's basically coiled up. You've been ranging, right? The range is tightening like a coiled spring. All right, my bad.
Is Dbloc talking?
Oof. The Man Siri Edition Ghost with the orange guts. Jesus Christ, that thing's beautiful. Yeah, it's pretty close to the squiggle. Not too far.
There you are. Now I can hear you.
Actually, I'm being kind of modest. I'm gonna be honest, it's pretty much right on point. What are we at right now? We popped up to 6.5. 6.5. I was looking for it to run up to like 6.57. That's the measured move. That takes all of those liquidations. What do you mean it's too large? Basically, right? Pop down, pop up to no, about 65, right? I'd say 65.1. Pop back down. What do we get? 65. Yeah. Pretty close. To be fair, I did have 3 squiggles, but that was the base case. What is this? Oh. Now we just need the last part. You know? Yeah, midweek reversal watch between tonight and tomorrow, which would be down. Came within 30-40 bucks of free in the trap shorts. To me, that was close enough, right? Within the margin of error. Then we had our 3-day up. We're looking for our midweek reversal. I just want to break this range, y'all. The last thing I want to do is come down for the midweek reversal, trap long, trap short, weekend trap, and be back in this range next week. Straight up. Just let the head and shoulders play, you know? And take us to 58. Morning, Cosmic. What are we just shilling our bags now? No, I'm just talking shit. I don't care. Just trolling. It's kind of crazy to see your country on a chart, right? All of the arguments, all the political fights, all the switching of power from one side to another, all the political theater. At the end of the day, it's just mean reversions and deviations. Kind of bugged out. I gotta add some new I've had a couple of important historical catalysts that I need to add. The Cell BTC played out. Let's see, where's Bitcoin? Though early. A lot early, actually. What about the right side? That's what the Dixie's at. But this is not why I pulled this up. This is why I pulled this up. Anybody that was here in 2023 remembers me screaming cup and handle here like a lunatic when everybody else was looking at not 2023, sorry, 2025. Everybody else was looking at alts. So cup and handle. Silver will never go over 50 is what they told me. I don't understand how silver works is what they were saying. You should stick to crypto. You don't understand metals if you think that silver can get above 50. Why do you think we rejected off of 50 so many times? Blah, 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 blah. You know what sucks the most about that shit? Because, I mean, it's whatever. People talk shit, so it's cool. What sucks is that they're never here to be wrong. You know what I mean? Like, when it finally does play out, like, they're never around. Interestingly enough. Interesting little setup on silver here. Big gap above. Shit. Let me see something. Hmm. I don't hate this at all.